why hundreds of U.S. banks may be at risk of failure. CNBC story. You could see some banks either fail or at least, dip below their minimum capital requirements. Christopher Wolf, managing director and head of North American banks at Fitch Ratings, told CNBC consulting firms, Claris Group, analyzed about 4,000 U.S. banks. And here we go. Found 282 banks faced the dual threat of commercial real estate loans and potential losses tied to higher interest rates. The majority of these banks are smaller lenders with less than $10 billion in assets. Most of these banks aren't solvent or even close to insolvent. They're just stressed, Brian Graham said. Co-founder and partner of Claris Group told CNBC. That means there will be fewer bank failures, but it doesn't mean that communities and customers don't get hurt by that stress. Tom?
So there is a crisis that's about to happen. And so he's saying, you heard he said, there'll be fewer bank failures. What do you mean fewer bank failures? That's like saying, hey, when the hurricane just passes by, there'll be less rain, but it's still raining. Yeah. So that's what's going on. Here's a number for you. $962 billion of commercial paper refinancing in the next 18 months, ending around end of second quarter next year. So actually, we're coming up on a year.
12 months, yeah.
Yeah, it's 12 months out. I was thinking since the beginning of this year. $962 billion.
Nah.
Now, if the rates go down, that way they could refinance. Oh, wait a minute. The Fed just said the rates will be higher longer.
Getting warm.
So there may be fewer bank failures, but there's going to be bank failures. There's going to be commercial real estate that goes into receivership. And this isn't going to be like 1928 and the Great Depression, but you're going to see a ton of this stuff. And the big private equity firms and Jamie Dimon are ready for it because their balance sheets are ready to pounce.
And it's interesting that they use that term. They're not going to be insolvent. They're just stressed. So if you ever go to a doctor, they're going to do something called a stress test on you. They do the same thing for banks. Basically, how much money, how much cash reserves do you have in the house? Basically, the FDIC, what is it, $250,000 if you, anything above that. Basically. So I remember when you interviewed your buddy, your good buddy from WAMU.
The best interview ever.
Oh,
yes.
The CEO actually enjoyed it.
Yeah.
He was upset. I was happy about it.
So we've seen
his wife was screaming in the hallway.
Yeah, so, I mean, what do you expect? But they couldn't pass the stress test. I think they lost, what, $300 billion?
They went from being a $330 billion company, WAMU, to Chase buying them for $1.9 billion.
Yeah.
Jeez.
So that was the biggest bank failure, and that was obviously in 2008 because it was all tied to the mortgage. What was the term that they used for mortgage? Well, no income, no assets, but the toxic mortgage.
Also mark to market. The value of the assets dropped and suddenly.
But that was the biggest bank failure in American history. But all the other biggest bank failures we've ever seen in American history were in the last 12 months. Signature Bank, First Republic, Silicon Valley. I think First Republic had $200 billion insolvent. Silicon Valley, another $200 billion. Signature Bank, $100 billion. These banks better be ready to pass the stress test. The first time it was tied to mortgages. Now it's tied to interest rates, correct?
And big commercial property.
Yep.
Yeah. He who has cash right now is in a nice place. He who has cash, he can buy a lot of things for a discount, especially now that inflation is not going lower. Mm-hmm. And by the way, Tom, if all of a sudden unemployment rates climb, just so everybody knows, this is the one thing that Jerome Powell is not going to know how to control. Can you go up to the unemployment rates right now, Rob? Just pull up unemployment rates in the States. Unemployment right now is what?
3.5%.
Is it 3.8%?
Find a chart for me. Find a chart.
Yeah, so right there, 3.8%.
It's creeping back up is the bad thing.
Yeah, that's the thing. By the way, if that thing, you see it's not staying flat, it's kind of going up a little bit, right?
Yeah.
If that thing, Vinny, goes to 4%, 4.5%, if it goes to 4.5%, if it touches 5%, again, the key word is if. We can put another short.
Allegedly.
But allegedly, if it touches 4.5%,
what happens?
You know what happens?
What?
That guy named Jerome Powell has to change his position and actually announce rate increase of a quarter of a basis point to a half a point. Yes or no?
Correct.
Absolutely.
Yes.
If that thing touches 4.5%.
And let's just say Pat, in the next couple of years, especially with AI taking over and a lot of these people are going to be jobless, that is going to start going up. That's the biggest fear.
Allegedly.
But I'm just saying it is going to happen.
The
People
number
losing
that
jobs.
they want to keep it under is 5%, correct? But
it's
if it
creeping.
goes to 4.5,
Not 4. I don't think it happens at 4. I
5.
think at 4, look, it's only 0.2 away, right?
yeah,
It goes
no,
to 4.
5 is the number that they're
think
trying to keep
4.5
this bad boy
is
under.
the number. I think if it goes to 4.5, Jerome Powell's going to take a.
Pat, I'm itching for a bet. Because
by
you're going to lose money to me. You're going to lose money to me.
And
Do
by
you
the
think
way-
it gets to 5?
No.
Okay.
I don't
I was
think-
gonna-
By when? By
I was
the
going
end
to
of the
take the
year?
under.
No,
by the
no.
election.
Oh, no.
No.
And by the way, let's keep in mind.
No.
I'm just itching for a bet, guys.
No, I'm just saying AI. I'm just saying AI is going to take a little while, but it's like you said.
You're right.
It's starting to creep
You're
up.
right. You're right.
Because
Go
what are
ahead.
those people going to? And then think about what's going to happen to society when all those people start losing jobs and they have no money.
Yeah.
Go think about that.
They're losing jobs now. The numbers behind the numbers on labor is scary. Q4, the net increase in jobs was part-time jobs. More full-time jobs were lost in Q4 than were created. It was a net decrease. The net jobs report in Q4 was part-time jobs. The net job increase in Q1 was part-time jobs. We have lost more full-time jobs than we've created going back to August of last year. So there is a shift that's going on in the labor base underneath, and that is the dirty little secret behind these jobs reports, which are politically driven. But the Fed, in all their footnotes, F-R-E-D, Federal Reserve Economic Data that comes out of St. Louis, they're putting it in the footnotes. It's there in the footnotes, but none of the mainstream media is talking about it. We're losing full-time jobs and replacing it with part-time jobs. McDonald's, as we said on the last podcast, had a tough earnings report and then warned everybody. And by the way, the full impact of $20 minimum wage in select market is going to hit me hard in Q2.
Tom, what was the Fred thing?
Federal Reserve Economic Data out of St. Louis. You can just look it up. It's called Fred. You go Fred data. And
Tom, let me tell you something. You're like Right Said Fred. Your stats are too sexy.
this is it. This is Fred. It's a public website by our federal government.
Yep.
And you would think that they would be hiding in it, but the
sexy
footnotes are clear.
Too sexy.
You guys were asking for the shirts. It's officially here. The other day, I take Dylan to a practice I've never been to a facility I've never been to. And I'm walking in. 3 fathers are wearing the Valuetainment Future Looks Bright hat. I'm like, you got to be kidding me.
Hell yeah.
It was the sickest thing to, PBD Future Looks Bright. They had the hats on. We all took pictures. It was fantastic. We had great conversations. So, the word, folks, to save you from getting in trouble is called allegedly. So now we have shirts for you to wear called allegedly. Rob, if you can show these pictures, and you can. We were going to announce this next week, but they're now here for you to order. Allegedly, you can buy it in black with white. And on the back of it, if you can show the back of the shirt, Rob, the back of the shirt, zoom in a little bit, says Future Looks Bright. So in the front, you can buy that with red. You can buy it in black. Go to the red one so they can see the difference. And you can also buy it in white with black.
I like it.
And listen, go to work, go to the gym, wear a shirt, allegedly, allegedly, allegedly. Allegedly. You can use the word allegedly on everything to protect yourself. It's the number one insurance word in communication today being used by everybody. So here's what we're doing today. For the allegedly shirts, for anybody that goes and orders, the first 100 that ordered the allegedly shirt with a Future Looks Bright hat, will get a Future Looks Bright shirt and a Valuetainment pin sent over to you. So you order an allegedly shirt with a Future Looks Bright hat, you get a Future Looks Bright shirt and a Valuetainment pin being sent over your way. Go to vtmerch.com to place the order. Again, vtmerch.com to place the order. Is there a code for it, Rob, or no?
No, I just put the link in the chat to the allegedly shirt. Put everything in your cart, and then we'll take
So
care
if people that are listening to this on Spotify or Apple, what do they do? How do they do it?
It'll be in the description for Spotify as well.
So you put in the description
iTunes.
Spotify as well.
Correct.
Fantastic. Okay. Go sport the gear, guys. We want 1 million people in America wearing Future Looks Bright gear, walking around telling everybody that the future looks bright because we believe it does.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.